the pleasure of welcoming Bianca Lins. She's going to be addressing stablecoins, both opportunities and challenges from a legal perspective. Welcome.
Hi, everyone. Thanks for the warm welcome. Well, first of all, I'd like to say that I'm very grateful and happy to be here today to speak to you about a topic in the crypto world that is becoming, from my perspective, more and more important. Well, as a research assistant at the Propter Hominis Chair for Banking and Securities Law at the University of Liechtenstein, it is virtually my daily business to research on current trends on the financial markets and their legal aspects. Plus, Liechtenstein is taking currently a leading position with its draft of a blockchain act, with the aim to create a legal framework that builds confidence and gives legal certainty. So what I'm talking about in the next roughly, 17, 18 minutes are stablecoins, the concept, opportunities, challenges, and of course the legal aspects. So what is our initial situation? Well, there are two things. First, money. Why do we need it? What is the purpose of it? Well, we can say that money has three main functions. First, means of exchange. Without money, we would have to exchange goods and services directly for other goods and services. So we would have to engage in barter. With money that is accepted by everyone, it simplifies our trade. The second thing is that it's a unit of account. Well, money enables us to compare the value of different goods and services. It is the standard used to express their prices. It makes it possible for us to compare the costs and incomes and profits over the time. Thus, it is the basis of accounting, a system which enables us to plan and to take economic decisions. And the third function is the store of value. Well, it is used to accumulate savings. Well, I guess each one of us has at one point put some euros in a piggy bank. Money is the liquid reserve par excellence. It is capable of being converted easily and quickly into any type of good or services. Now imagine a unit of measurement which fluctuates widely over the time. A reserve of value which melts away. Inflation, but also deflation, are threats to money and to currencies. Just look at Venezuela, the Ukraine, or Argentina. Therefore, we need a stable currency that successfully performs the function as a means of exchange, unit of account, and a store of value. A stable currency which has a stable purchasing power. Fiat currencies like US dollars, euros, or Swiss francs though they are also fluctuating or subject to fluctuating exchange rates with a diminishing power and inflation, they are still considered as stable because their fluctuation is not so bad. It's in a range that is still, so we can use it as a payment possibility for our daily life. So that's the one thing. The second thing is that we've got this great technology. In 2009, the Bitcoin protocol was first revealed by Satoshi Nakamoto. By that, not only the first mining of Bitcoin happened, but also the idea, the powerful vision of a decentralized future was unleashed. In the aftermath of the financial crisis, the Bitcoin protocol showed a future where a distributed database using modern cryptography would enable real peer-to-peer exchange. No intermediaries would be needed. Now, 10 years later, we know blockchain doesn't mean Bitcoin, it's a technology, actually with an inexhaustible potential and possibilities. We know that this technology and its possibilities are becoming more and more recognized. More and more people, more and more companies coming up with finding new possibilities to use this technology. inspiring people with inspiring ideas. It is a technological transformation that is happening in every area, in every sector right now. We see the world growing together a bit more, and borders are blurring in our digitalized world. But there are still some challenges we have to face, especially when it comes to cryptocurrencies. Imagine you'd go shopping on a Saturday morning, like to the supermarket. None of the shops would state currently their prices in Bitcoin or Ether or in any other of these currencies. The reason for that is pretty simple. We all know the tremendous volatility, especially in the past 10 to 12 months of Bitcoin or Ether or all these cryptocurrencies. Not really what we're looking for our daily payments. And on the other side, of course, also no business is likely to state their prices in any of these cryptocurrencies if the risk is that their value can drastically fall in no time. So that shows us that despite the fact that cryptocurrencies, just wanted to show you this chart. I mean, we see that like at the end of the rally at last year, the fluctuation was really high. I have to admit, though, that if you look like at the price of like Bitcoin in the past 60 days, the volatility decreased, comparing it, for example, to the US dollar, but still it's not really that what we could use for a daily business. So that shows us that despite the fact that these cryptocurrencies had an impressive rise in price and interest, they are still primarily used for speculation and not able to use in an everyday transaction. There are too many spikes and crashes, day-to-day fluctuations, and so what we need is a currency that is stable enough to use it on a daily basis. We have this great technology, but how can we use it for everyday life? The idea came up with a stable coin, cryptocurrency that brings together the stability of fiat currencies and the blockchain advantages. So the idea is to create a stable coin as a cryptocurrency that is pegged to another stable asset, for example, fiat currencies like euros or US dollars. A stable coin that is not tied to a central bank, but has low volatility. And that would allow practical usage of using cryptocurrencies in every day. So for any business to accept day-to-day payments with salaries, rents, or lending. In other words, anyone who wants to benefit from the advantages of blockchain technology like transparency, security, or immutability without losing the guarantees like trust and stability provided by fiat currencies needs a stable cryptocurrency. That's the idea. Today, we not only have fiat collateralized stablecoins, actually there are other models. We can roughly differentiate three main groups. Beside the fiat collateralized stablecoins that I've just mentioned, we have the crypto collateralized stablecoins, IOU decentralized stablecoins that are backed by a crypto and or other multiple assets. They work quite similar to the fiat collateralized counterparts, but with the exception that the collateral is not an asset in the real world, but rather another cryptocurrency. But to account for the price volatility of the underlying cryptocurrency, then again, these stablecoins are often over-collateralized. And we've got, we've got non-collateralized stablecoins, which are actually not backed by anything, rather than the expectation that they will retain a certain value. So one often mentioned solution to non-collateralized stablecoins are seigniorage shares approach. It's a concept that builds on contracts that algorithmically expand and contract the supply of a price-stable currency, much like a central bank does, but in a decentralized manner. But as we only have about 8-9 minutes left, we are going to focus today on the fiat collateralized stablecoins. So in general, these fiat-backed stablecoins work the following way. The idea is to strictly peg the cryptocurrency to a fiat currency like a euro or US dollars by holding euro deposits in the corresponding number of tokens that are in circulation. So fiat currencies are deposited as a collateral, and coins are issued one-to-one against fiat token. With that, the goal is to provide liquidity for clients and to send euros or US dollars on the blockchain, for example, on the Ethereum network. But this concept needs a central part. The central part is required. You need a custodian, which guarantees the issuance and the redeemability of the stablecoin. So that sounds pretty good, I think, and pretty simple, but the thing is, what about the legal aspects? Most supervisories today consider stablecoins or transferable currencies to be payment tokens. But are they regulated, and if yes, which regulation is applicable? We have, as I said before, the custodian, which is of course usually a bank and under the banking law, but what about the issuer of the stablecoin? Well, we have two perspectives. The first perspective is the ICO. In general, today we have a wide range concerning regulations of tokens, respectively ICOs, depending on what specific token we are talking about. There are countries who have regulations, moderate regulations, favorable regulations. Some countries even ban ICOs. Well, Switzerland and Liechtenstein, of course, are among the countries who have favorable regulation. As said before, Liechtenstein has a draft on a blockchain act, which is to regulate these services and service providers to give a legal framework to access the market and operate on these markets. The European Union is, from my perspective, when it comes to regulating the crypto markets, pretty quiet. There are some initiatives and also some approaches so far. We had, I think about a week ago, a report on advice to ESMA published by the Securities and Market Stakeholder Group concerning ICOs and crypto assets. We've got the European Blockchain Observatory and Forum. The European Parliament proposed in August to include ICOs in the Commission's proposal on crowdfunding services regulation, but that's basically it. So one reason for that could be that maybe tokens or cryptocurrencies aren't that unregulated as one may think. We still have the European Financial Markets Law. And depending on what ICO you have or what token you're issuing, this may also be applicable. The thing is with fiat collateralized stablecoins that you're holding deposits. And holding deposits automatically initiates the supervisory authority to appear on stage and ask for your license. So the question, of course, is which license would you need? And that, to be honest, is a little bit tricky. So first of all, we would have to find out what token do we have, or what could a stablecoin be. So with a little bit of fantasy and creativity, maybe it could be a currency derivative. Well, it is a contract to exchange one currency for another to a fixed price that is fixed on the purchase date. But the problem here is a little bit that you have at the point of contract a specified date in future when you will change it. So that's not really what we're looking for. The second possibility would be to just say, well, it's the acceptance of deposits or other repayable funds, but that's also not really it. And for both concepts, you would need a banking license. But if you look at the banking law, you will find the provision that the receipt of money does not constitute acceptance of deposits or other repayable funds if the amount received is immediately exchanged for electronic money. So maybe we are more lucky with e-money. Let's have a look at this concept. The e-money directive says that the concept is fulfilled in the case if e-money is an electronically or magnetically stored monetary value in form of a claim against the electronic money issuer. So meaning a central issuer. So you might start to ponder and think that because of the inherent decentralization of blockchain, it's not possible to have a central issuer, but it's not about generating the token. So of course you have a central issuer. Second is that it must be issued against payment of a sum of money, so in the sense of fiat money, not virtual currencies. The purpose must be to carry out payment transactions, and it must be accepted by any other legal or natural person other than the electronic money issuer. So the stablecoin must therefore be accepted by others as a means of payment, as a medium of exchange. E-money is considered to be a substitute for coins and banknotes. So the issuer of the e-money must issue the e-money at the nominal value of the money received and must reimburse the monetary value of the e-money held at par. So it's not allowed to issue above nominal value. This could impose increasing the amount of money, and that's not allowed. So I think that fits pretty well for on the first side. But by issuing a stablecoin in terms of an e-money, well, you would have, of course, some advantages. The thing is, you would have to get an authorization as an e-money institution, which means you would have some, well, advantages, comparing it especially to get a banking license. The requirements are less strict than for a banking license. For example, the initial capital of a bank would have to be 10 million Swiss francs. For an e-money institution, it's 350,000 Swiss francs. But of course, you'd be by the European legislator regulated entity, which also means that you have requirements concerning risk management, regular audit. But by being an entity regulated by the European Union would also mean that you for sure get easier one of the big four to give you an audit for your stablecoin. Plus, being an European economy, being an e-money institution authorized in the European Union would give you access to the whole European economic area. The big challenge we're facing now is that regarding to the directive, e-money must not be distributed or transferred privately. So you have to make sure that the stablecoin is not forwarded from your e-money account to a private wallet. The reason for that is, well, of course, the anti-money laundering requirements we have in the European Union or in the whole world. And to comply with that, you have to technically and legally, you have to be, how can I say it? You have to make some technical implementations to assure that it cannot be forwarded to a private wallet. The solution could be to work here with payment accounts in the terms of the Payment Service Directive 2. With that, you would have the full AML and KYC process, but that is currently a bit of a challenge. So, well, from my perspective, I still think that there will be a solution for this challenge with forwarding the stablecoin, and I think that in the future, in the very near future, we will have stablecoins to use for our everyday life payments. Well, if you have any questions, please get in contact. I'm happy to answer your questions, and thank you very much, and have a great time at the Crypto Summit. Thank you.